Buying your first home is supposed to feel exciting, and it is, but here's some most people don't find out about until they're already deep into the process. There's a real gap between what people think buying a home involves and what it actually involves. So today I'm walking through things nobody tells first-time buyers, using real data on what buyers actually regret, what actually surprises them, and what you can do differently. This one could save you thousands of dollars and a lot of stress, so stay tuned. Hey everyone, Joe Skipper here with Skipper Realty Group, and we work with buyers and sellers across the Portland Metro, Wilsonville, Salem-Keizer, all areas of Oregon pretty much. I've walked a lot of first-time buyers through the process, and I've noticed some handful of surprises come up and again. So today, instead of giving you a generic checklist, I'm gonna walk you through the real things that catch people off guard, backed by actual data, so you can walk into this with your eyes wide open. So we're gonna start with the biggest myth out there, and that is you need 20% down to buy a house. You don't. In 2025, the median down payment for all US home buyers was 19%, but for first-time buyers specifically, it was just 10%. The median down payment for a first-time home buyer was actually 9% in 2024. That's a massive difference from the 20% number most people have in their heads. Now, here in Oregon specifically, the numbers do run higher than the national picture because our home prices are higher. The median down payment for single-family home purchasers in Oregon was about $65,000 in 2024, more than double the national median, making Oregon one of the most out-of-pocket intensive states in the country for buyers without existing equity. Now that sounds intimidating, but here's what actually nobody tells you. Oregon actually has one of the most robust down payment assistance networks in the country. Oregon Housing and Community Service offers down payment assistance of up to $60,000 or 20% of the purchase price, whichever is less, often as a grant or forgivable second loan for eligible first-time and first-generation homebuyers at or below 100% of the area median income. And if you're in Portland specifically, the city's down payment assistance loan program can provide up to $80,000 or up to $100,000 in certain targeted areas as a 30-year loan with 0% interest and no monthly payment. So the point of all that is don't let the 20% myth stop you from even starting the conversation. There are real paths to homeownership that most people do not know exist. Here's the second thing that nobody tells you clearly enough, is that your mortgage payment is not your only housing cost. The cost of homeownership in the US has climbed in recent years, fueled by inflation, rising interest rates, and a really highly competitive housing market. And on top of your principal and your interest, you've got property taxes, homeowners insurance, and this is the part that really catches most people, maintenance. According to Bankrate's 2025 study, the average homeowner spends around $21,400 a year just to maintain their property, costs that are often overlooked during the buying process. Now, that's not a one-time number, that's every year for as long as you own the home. So this is exactly why when Bankrate surveyed homeowners about regrets, the single most common one was cited by 42% of homeowners with regrets was that maintenance and other hidden costs were more expensive than they ever expected. So when you're running your numbers before buying, don't just ask, can I afford this mortgage payment? Ask, can I afford the mortgage payment plus a real maintenance fund plus the inevitable surprise repair? Because that surprise repair is coming. 66% of first-time homeowners report facing unexpected home issues after buying with an average cost of about $5,000. Here's a third thing that genuinely surprised me when I looked into this research. How much rushing affects regret. 38% of first-time homebuyers said they felt pressure to decide quickly, and those who did were nearly 3 times more likely to experience buyer's remorse. 3 times. That's not a small effect. And the emotional side matters more than people think. Buyers who felt overwhelmed, stressed, or nervous during the process were the most likely to regret financial decisions driven by those same emotions. And I bring this up because I think that a lot of buyers, especially first-timers, feel like they have to move fast or they're gonna lose the house, they're gonna lose the rate, they'll lose the moment. And sometimes that's true, but making a decision from a place of panic is how people end up overpaying, skipping steps, or settling on something that doesn't actually fit them. In fact, 31% of first-time homebuyers reported buyer's remorse overall, and that number jumped to 44% among buyers who purchased within the past 2 years. So my advice to you, and I tell this to every first-time home buyer, is this: it's okay to walk away from a house that doesn't feel right. Even if everyone around you is telling you to move fast, there will be another home. The next one really genuinely concerns me as an agent. 17% of first-time buyers skipped a home inspection altogether, and buyers earning under $50,000 annually were the most likely to do so at 23%. I understand the instinct. In a competitive market, market, people think waiving the inspection makes their offer stronger. And sometimes it does help you win the house. But here's the trade-off nobody talks about enough. A standard home inspection looks for problems like roof leak, foundation crack, but it doesn't tell you that an 18-year-old HVAC system will need replacing in 2 years, or that your utility bills will run 30% higher than similar homes. Even with an inspection, there's a real gap between what a house looks like and how it actually performs day to day. So skipping the inspection entirely is a real gamble, and shame on agents for telling you to or advising you to skip it. You should never listen to an agent that tells you you need to skip a home inspection. A roughly $500–700 inspection can help shield you against thousands of dollars in surprise costs. If you're in a multiple offer situation and feel pressure to waive it, talk to your agent about other ways to strengthen the offer first. There are usually other levers to pull before you give up that protection entirely. Okay, here's the last big one, and it's probably really the most important big one. Lenders are often going to approve you for more than you should comfortably spend. They're not trying to be malicious. That's just how their underwriting works. But the buyers who end up happiest are the ones who didn't max out what they're pre-approved for. If the specific monthly mortgage payment makes you uncomfortable on closing day, it'll hurt a lot more down the line when the total cost of home ownership literally hits close to home. Repairs, renovations, insurance, and property taxes, they all add up. And here's a sobering stat to back that up. In a recent survey, 94% of Gen Z and 86% of millennial home sellers said they regretted buying their home and decided to part with it. And a major driver of that is buyers taking on a bigger mortgage with smaller down payments than previous generations. So my advice is not to not buy a home, but it's simple. Get pre-approved, see the top number, and then have an honest conversation with yourself or your partner about what you're actually comfortable spending every month. Not what that bank says you can spend every month. What you know you can live with, even if your water heater dies in a year or two. I worked with a young couple buying their first home in the Wilsonville area. They got pre-approved for a number that honestly really made them nervous the moment they saw it. So what we did is we talked through it, and instead of buying at the top of their approval, they bought about $40,000 under it. A smaller down payment requirement, smaller monthly payment, and a real cushion left over. Fast forward a year and a half later, their water heater failed and their roof needed a $6,000 repair after a bad storm season. So because they hadn't stretched themselves to the max, they handled both without it being a financial crisis for them. They told me afterward that buying under their max was the best decision that they made in the whole process. Not the house itself, but the room that they left themselves financially. So here's the short version of everything that we covered today. You likely don't need 20% down, and Oregon has real assistant programs if you qualify. Budget for the real cost of ownership, not just your mortgage. Don't let pressure rush your decision, and don't skip the inspection just to win a bidding war. And don't buy at the absolute top of what you're approved for. Leave yourself room to breathe. If you're starting to think about buying your first home and you want to talk through what realistically makes sense for your situation, your budget, the assistance programs you may qualify for, all of it, I'm happy to have that conversation. No pressure, no obligation, I just want to help. You can reach me at 503-577-8853 or joe@skipperrg.com. And if this helped you feel a little bit more prepared, please hit the subscribe and like button. We put out content like this every single week for Oregon buyers and sellers. I'm Joe Skipper, and I'm going to see you on the next one.